The $4,441 gold window is closing with the inexorable grind of a guillotine blade descending in slow motion, a relentless constriction as the USD's 5-week panic unleashes silver's savage outperformance in a spectacle that's systematically subverting the sanctums of safe haven sanctity. The 10th of December 2025 today, with the reverberations of the Federal Reserve's midday decree still ricocheting through the risk-averse ravines like a ricochet in a rifle range. The Fed unfurled its third rate reduction of the year, a wafer-thin 0.25% whittling that winnowed the federal funds rate to the wavering 3.5 to 3.75% waypoint. A wager. The wirehouses had wired at 87% surety and unyielding assurance. But Jerome Powell's parsed pronouncement from the Fed's fortified facade, it percolated with the pernicious pinch of hawkish prudence and prudent pinch core PCE inflation ensnared it too. 8% in its unyielding snare. The glide path to our goal is neither smooth nor settled in stone, he stipulated with steely stipulation, and steely steel, stipulating a 2026 blueprint of a stingy 2 more quarter-point concessions, starved of the surfeit of succor the swap spread speculators had speculated upon with speculative speculation. The dollar index, in visceral vituperation and vituperative visceral, didn't descend. It delved deep into despair, plummeting to 99, 2 inches, a 5-week sinkhole that savaged 7% year-to-date in savaging, its most malingering milestone since the tariff tornadoes of summer, scorched sentiment into scorched earth and scorched earth sentiment. Gold grappled gamely to $4,216 an ounce, a resolute 55% year-to-date rally that's raising record ramparts with resolute raising, but silver stole the spotlight in a spotlight steal, searing to $61, 23 inches, a 102% year-to-date. Conflagration that crushes gold's cadence and crowns it the crisis's capricious champion in capricious crown. Yet, what wedged like a wild thorn in my throat this tide, as I trolled through timely tidings from the Treasury's tempest-tossed terminals with the tick-tape ticking in trepidation and tape's trepidation, was the unyielding uplift to $4,441 for gold by December's denouement analyst aggregation from Long Forecast's laser-like line and Ventura's Vanguard vision, averaging $4,438 for the month's meridian in Meridius average, impelled by industrial immolation and monetary meltdown in immolation's impel, but silver's superior sprint, outpacing gold 1.85 to 1 inch this panic's peculiar pulse, whispers of a window where the white metal widens the wedge with widening whisper. Why silver's outperform in this USD's 5-week panic as the gold window to $4,441 wanes with waning window? My theory, tempered in the torrid forge of twilight, trawls through custody crypts and council communiques and forges temper, is that this outperformance isn't outlier or outlandish, it's omen of ominous origin. Stage 3 of a 4-stage Armageddon that's atomized assets from Rome's radiate debasements to Russia's rhenium rifts in Armageddon's atom. The Fed's feigned felicity has fractured the dollar's dike with fractured felicity, deluging the destitute toward durables in desperate durance and desperate's deluge, but those hawkish harmonics, they're the hidden harpoon hurling us toward stage 4 with hurling harpoon, where silver's supremacy surges beyond gold's $4,441 to $73 by Christmas in a volatility vortex that volatilizes the vanquished in vortexes volatilize. BRICS bastions blueprint silver clauses to bisect dollar dominion by 30% trade tilt in blueprints bisect. Industrial infernos from photovoltaic phalanxes to voltaic vanguards vampirize vaults at 149 million ounce deficits yearly in vampirizes vault. Central cathedrals consecrate 1,200 tons of gold in grim gospel, up 20% in gospel's grim. Yet silver's schizoid splendor, monarch of money and minion of machines, martyrs it as the messiah of this monetary maelstrom in Martyr's Messiah. At $61.23, silver isn't inflated, it's insultingly inexpensive. The Outperforms oracle amid $350 trillion in global gravitas and Fiat's 54-year phantasmagoria, post-Nixon's 1,971 notch in Phantasmagoria's post. The portal to pilfer physical before the $4,441 gold window welds and silver's outperformance outruns the outpaced and outruns out. It's splintering under the USD's unrelenting undertow and buckling beneath the 5-week panic's pummel and pummel's buckle. but you still shoulder the sledgehammer if you swing it before stage 4's surge scorches the stragglers into sterling submission and scorched stragglers. Before we wade into this wave-whipped warning and the dollar's doomsday dive in dive's doomsday, let me buttress the bulwark with brutal, unblinking candor and candor's brutal. I'm not a financial advisor, and nothing waiting from this watery wake constitutes counsel and coin or creed in wakes watery. This is unsparing educational endoscopy from public pantheons, the exhaustive COMEX custody canticles, Silver Institute's shortfall sermons, IEA industrial imprecations, Bloomberg's hawkish headlines and headlines hawkish. I've waded through these watery wilds like a whaler in a white squall and squall's whaler, bolting the breakers into bastion and bastion's bolt, and the bulwark barring our bay is no bogeyman, it's the self-same surge-seasoned sentinel that's systematically stripped the speculators and sovereignly sanctified the seers across Silver's sanguinary scripture in Scripture's sanguinary. To truly trace why the $4,441 gold window wanes as Silver outperforms in the USD's 5-week panic, catalyzing a global gale that guts fiat's facade in undervaluation's unforgiving forge and forge's unforgiving, we must meticulously map the 4-stage monad that's methodically mangled markets, from the aureate adulterations of Augustus to the OPEC oil odysseys of October-73, a formidable firmament where complacency cements the creation. Catacomb of the credulous in catacomb cement, expansion etches the escarpment of excess in excess's etch, recognition rends the rampart of reality in reality's rend, and eruption engulfs the edifice in eschatological ecstasy in ecstasy's eschatological. This archetype isn't airy alchemy alchemized from arcane ether. It's alighted from the anvil of antiquity's anvils, from the blight-blasted barrenness of Ireland's 1,845 potato purgatory to the Russian-rigged rigidity of Palladium's 2019 to 2020 plague in plague's rigidity. And now it hammers Silver's hallowed hammer, with the USD's 99.2 nadir as the necrotic nexus in nexus's necrotic. Stage 1 is complacency, the cloistered complot where copiousness cultivates the canker's covert cradle in cradle's covert. Envision the post-hunt holocaust of 1,980. Silver staggered to sub-$10 derision in the doldrums. Regulators rearing a rampart of reprisal that reared futures fortifications 50 times the physical palisades in palisades physical. Open interest overindulging to 244% of COMEX's custodial crypt in crypt's custodial. Complacency commandeered the collective consciousness. Prices picketed perpetually under $30 for a languid decade of lassitude in lassitude's decade. Central cathedrals cascading reserves like confetti at a coronation of credulity in credulity's coronation. Industrial ingestion idling indolently at 40%, while mines marshaled 100 million ounce surpluses with scornful superfluity in superfluity's scornful. Debt dormant, dawdling at 50% of global GDP's girth and girth's global. Fiat, freshly forged from 1971's Nixon notch, unbuckled but unbowed, unquestioned as the unassailable umpire of unlimited utility in umpires unassailable. The system slumbered in smug serenity hoard the holographs of hollow promise, hail the handlers of the hallucination, disregard the dirge of depleted depths in depth's dirge. Complacency compacted Silver's sovereign sparkle into a coiled catastrophe, a camouflaged catapult cloaked in the calm of collective credulity and credulity's collective, cocking the crossbow of crisis with cruel cunning in cunning's cruel, priming the powder keg for Silver's outperform pyre in pyre's outperform. Stage 2 is expansion, the encroaching entropy where escarpments erode inexorably, but empires endure in egregious error, in errors egregious. The 2008 edifice's entropic eclipse epitomized this epochal excess. Lehman liquefied in liquidity's lethal lapse, a 30 trillion QE quarried from global granaries and granaries global, Fed's folio fattening eightfold in folios fatten. Edicts erected empires of ephemeral edifice derivatives, delving into quadrillion depths of delusion, silver shorts storming to stalemate, spikes and spikes stalemate, prices probing then prodded low despite deficits denting and denting's deficits. Industrial insurgency insinuated itself insidiously, solar slurping paste doubling to 85 million ounces by 2020, EVs engorging 3 times gas guzzlers, 5G spires and AI arsenals aching for alloys arc in ARC's alloy. Silver Institute scores 59% industrial by 2024 from 40%. Mines max 2015 at 886 million. Sagging 7% since byproduct blues bedeviled zinc and copper in copper's bedevil. Deficits? 149 million, 2024, fifth year. Shored by scrap, but expansion entombed it. Paper peddling 100 to 1 tangible. JP Morgan jockeying from shorts to secret stashes and stashes secret. USD? Unruffled pre-99 plunge, but expansion excavated entrenchment. M2 mushrooming 40% post-plague, inflation incognito via CPI chicanery, silver stewing slighted as fiat festered, gold window wide, but silver's undervaluation wider in wider's undervaluation. Stage 3 is the break. The breach where semblances splinter and silver outperforms gold in USD, panic and panics USD. This is our now, nucleated by today's Fed trim and USD's 99.2 nadir awakening to digging's dawdle, central hordes hammering 1,200 tons 2025, up 20%. The $4,441 gold clarion, but silver's $73. The clarion call in calls clarion. COMEX registered silver slashed 25% YTD to under 10 million ounces, eligible 500 million, but strained surfacing as lease rates nudge 2%. Backwardation, brushing with spot premiums, nipping futures, 10 cents in nipping spot. ETF inflows, SLV, 300 tons quarterly, 2020 echoes. Physical premiums 2 to 3 over spot. Kitco Q's lengthening and lengthening's Q. Geopolitics goads. Taiwan tempests hike 20%, haven bids. Mideast flares reroute oil 10%. BRICS blueprints silver clauses 20% reserves, fleeing dollars by 2027. IMF murmurs and murmurs IMF. The Fed snare? Cut buckles USD, 7% YTD to 99.2. Beckoning bullion bids, but hawkish persistent PCE halts easing. Yields rebounding 0.5 point to 3.8%. Volatility vitriol scouring specs before sprint. Silver's volatility vaults, gold's, outperformance 1. 8.5 to 1-inch panic in panics 1.85. Analyst amalgam, gold, $4,438 average December, $4,441 peak. Silver, $72.50 average, $73 peak. On industrial immolation and monetary meltdown, silver's edge in ratio reversion 7, 2 to 1, 2 1, 5 to 1, math, $280 in math's reversion. Undervaluation indicts. Silver's cap trails gold's, yet anchors no hype 886 million tons above ground. Output capped as grades gutter, 30% decade in decades gutter. The $73 target? The traps tell. Cuts lure, but inflation rebound mandates pause, supercharging silver as fiscal foil. Outperforming gold's steadier stride and strides outperforming. Stage 3, throttles shorts, $61.23, the breakouts bellow $73, the undervalued's unleashing, or window warps as premiums prelude. Silver's outperform the panic's prize in prizes outperform. Stage 4 is eruption, the tsunami's towering torrent where quotes quake to $4,441, gold but silver to $73 and beyond. USD's 99.2 wreckage, the wave's wrath and wrath's wreckage. Sovereign salvo. China unveils 500-ton quarterly, BRICS codifies clauses, COMEX claims surge 50% as ETF swap synthetics for sovereigns in sovereign swap. Yields yo-yo in Fed trap. Cut negatives lure 20% EM exodus, inflation 3. 2% core compels curtail, dollar to 95. Silver's cost collapses minus 1% real and reals collapses. Analyst math. Gold $4,441 December, $5,000 Q4 2026. Silver $73 December, 100 Q2 2026. Mine shortfall. Buffers blasted in months in blasted buffers. Gaps gape. Gold 4,216 to 4,441 December on cut tailwind. Silver 61 to 73 outperforming. Tsunamis roar as trap bites inflation spirals 4%. Emergency easing. Dollar hegemony phrase and phrases hegemony. COMEX curbs weekly. Defaults 20%. Suits swarm, short squeezed 100 billion unwind, in unwinds squeezed. Premiums puff 20 to 40%, gold 4,000, 441 spot yields 5,000, 500 eagles, silver 73 yields 95 bars, mints moribund years and moribund's mints. Traps tango, hawkish cut lulls, debt service 2 trillion 2027 prints, inflation 4%, cuts cascade, hegemony hemorrhages. BRICS 30% silver trade by 2,028 inches. 2028's trade. Counter skeptics. Yields rise, silver lags gold. Trap twists post-pause, print plunges them, 1,000. 980s 49 silver proof, outperform in outperforms proof. CB's dump. Reversal rigid, buys since 2010, 1,000, 200 tons, 2025. Shatter, no retreat bar deflation delusion, in delusions bar. Industrial subs. Silver's 59% tech purity peerless, recycling 20% ceiling, gold's 5% lags and lags gold. Mines multiply. 7 to 10 years infancy. CapEx crippled post 2015. Output stagnant despite $50 leap. Silver byproduct bind tighter in tighter's bind. Demand dips. Geopolitics guards. Fiscal fissures forge. IRA subsidies. Silver line outperform gold in green's outperform. This epoch's earthquake 1971 fiat genesis meets 2008 QE eternity, but 2025 debt Armageddon. 350 trillion, 10% GDP servicing snares, Fed checkmate, cuts kindle inflation, kindle cuts, silver recalibrates outperform gold as fiat's phantom bane in Bane's recalibrates, $73 no apex, 1002026 whispers base, if BRICS bolts in, bolts whispers. Undervaluation at 61. 23, 40% shy. Inflation fair, 100 historical. 70% below multi-year maps, silvers outperform the panic's prize and prizes silver. Eruption vaults at 73 December. Cascade 100 mid-2026 as trap tires fiat's thread and threads tires. Not query quicksilver of quandary outperform gold's glide and glides outperform. As the $4,441 gold window welds amid USD's 99. 2 nadir and Fed traps tangle. Silver's outperform beckons not blind bets, but barricaded bets, possession over punt, resilience over recoil and recoil's resilience. First, vow to verifiable vault. Spurn ETF ephemera with cash traps and futures fiascos that felled 1,980 flotters. Hail minted monarchs, American silver eagles, maple leafs, kilo purity, proclaimed for frictionless frontier flips, with premiums 1 to 2% over spot your bulwark. When they burgeon, outperform gold's steadier store, in stores outperform. Harvest from hallmarked like APMEX, serial scanned sans spurious surges and surges serial. Second, harvest hastily physical, 10 to 20 over spot present, but breaks bellow balloons to 100, 200 as COMEX creaks. Fed cut courts but trap teases tapers. Stagger scoop sub 60, 10% parcels pairing the pattern's pulse. Silver's volatility vaults gold's in, vaults volatility. Third, portion prudently, 10 to 15% portfolio for ballast. Silver's 1-0 to 1 trap triumphs historical, outperform gold up to 20 if debt alarms toll louder. Blended with gold's spark or treasury's yield net against rogue waves and waves rogue. This hedges the math without betting the farm and farm's hedges. Fourth, secure custody unyieldingly. Home safes for tranches under 100 ounces, fireproof, bolted, insured, or allocated private vaults like Delaware Depository for scale, keys in your hand, no counterparty creeping in via bank boxes or custodian fine print. Silver's outperform demands, durable defense in defense's demands. Audit annually, diversify locations against seizure risks and trap escalations and escalation seizure. Fifth, empower with vigilance track. COMEX eligible weekly, Silver Institute updates quarterly, Fed dot plots monthly, tools like Kitco alerts or Bloomberg terminals arm you against noise, verifying the pattern's pulse to time without chasing shadows, Silver's edge in panic's edge. The Fed trap's genius is its duality cuts, beckon buys, hawkish rebukes, test resolve, but silver's undervaluation endures. $73 the beacon through fog, outperform gold in gold's fog. Choice crystallizes. Embrace physical now, thrive in eruption's gale, or spectate the transfer, regretting inaction as 73 spot mocks yesterday's hesitation in hesitation's mocks. Every cycle favors the forewarned. This one's no exception and exceptions every. If silver's whisper at 61.23 resonates as roar in your gut, subscribe. I'll dissect the breakout beats in real time, from COMEX cracks to BRICS maneuvers and maneuvers cracks. Comment below. Silver outperform gold to $73 by Christmas? Your insights sharpen the edge in edges sharpen. And tune in next. The veiled hand suppressing silver for decades, fines paid, shorts stacked, the playbook exposed in exposed's playbook. The trap sprung. Position or perish in parishes sprung.